In this day and age, we as forex traders need to learn how to use candlestick patterns correctly. This is the video on how. In this video, we'll be learning about the three line strike. We'll figure out how it works and why it works, how to spot it, how to use it, and then how I use it in a live market. Let's start off with the basics. So a three line strike can happen in a bullish or bearish market. For this example, we'll use a bullish market where it makes higher highs and higher lows and higher highs and higher lows. If we wanted to spot a useful three line strike, we'd always find it at the end of a correction. This is a higher low of the market. This is where we'd see three bearish candlesticks before a huge engulfing bullish candlestick. The bearish candlesticks need to be making a lower low than the previous one, and then for the engulfing candlestick needs to close 50%, at least 50% of the three previous candlesticks. So now you know what a three line strike looks like in a bearish and bullish aspect. However, what's the point of it if you don't know how to use it? We'll go through it and the meaning behind it. With the market, it always tells a story. For the three line strike shown here, it shows that buyers are slowly coming out of the market and it's bringing sellers into the market, pushing price lower. For example, in the market, we'll see this in an uptrend at the end of a correction, where sellers are slowly coming out of the market before buyers come back in to make new higher highs. So let's say that we're in the market right now and we see price making lower lows, lower highs, lower lows, lower highs. That's good and all, but where do you want to enter? For every downtrend or uptrend, there'll always be an impulse, a correction, and a continuation. We'll always see three line strikes, and the most useful three line strikes at the end of a correction. So in a downtrend market, we will see it at the end of the higher high, where we'll see three bullish candlesticks before a huge red engulfing candlestick. That shows the reversal and the continuation. So now we know the basics. Let's get into the charts. So we're in the live markets now, as you can see, and I can see here. And we can see markets in a downtrend. Okay, so let's just play time back to here, just because it's, as we can see, this is impulse, and then this part here is a correction. That's what I was talking about earlier. And we see here that this is where price, we see a three line strike. Now the market is never ever perfect, but this is where we see the three line strike. And we call it the three line strike because even though this isn't a bullish candle, it's still classed as a three line strike because it's not a huge bearish, it's a doji candlestick before a huge impulse downwards. So let's say that we was in this trade, we wanted to enter at the break of the lower candle here, set stop loss above here, and you want your take profit to be at the next key level, which should be down here. We did it down here because this is a risk reward ratio of 1 to 5, as we can see. And we'll let this play out a little bit. And boom, there we go. That's our first trade, which is a risk ratio of 1 to 2.5, so we're 2.5% upwards. And now let's wait till we see another candlestick form. Do we see anything here? No, so we carry on playing. Here, this is where we've seen one. Boom. So we see a three line strike here. Perfect, clear as day, beautiful. This is exactly a textbook three line strike, because we see the three bullish candlesticks before a huge bearish candlestick. And again, we would place our trade at the break of the low, setting our stop loss above the bullish candlestick, and then setting our stop loss to the new low down here. Let's play. Come on, bosh. That's how you hit the take profits. And see, beautiful so far. I bet we've got a few more to go. So we want to see price making. See, now there's another one here. Look how huge this candlestick is here. I probably wouldn't have entered for a trade, but if you caught it on time, you could do. Now, however, you see here how this is a small and then there's a huge candlestick here with huge wicks. That means the break of the neck is here, which I personally wouldn't have entered. So let's wait for some more. There we go, there's another beautiful one here, where we see the 3 strikes up and then a huge strike down. Would have entered at the bottom of this, setting our stop loss above, and our take profit at the next key level, giving us a risk ratio of 1 to 2. Boom, and there we go again. That is how simple this trading method is. Now, me as a trader, I wouldn't use this as my only reason to enter a trade. It would be one of my many confluences. I normally go for at least 3 confluences for it to be a high probability trade. But it just shows there 2.5, 2.5, and then 2. So that's already 7% up. So brilliant. Thank you guys for watching. I'll see you soon. Skabash.